Hey everybody, Signa here with the Bullish Bears. In this video we're going to talk about the regular trading hours for the futures products. Equity futures like the S&P, the NASDAQ, the Dow, the Russell, they have a Globex trading hours and then they have the regular market or the cash open trading hours. There is a small window of time called a pre-Globex, but we really can't trade that. You got to get permissions for it. There's a different um, commission fee, and we just don't trade it. But it is between 4:15 and 6 o'clock. And that's this small time frame here that I'm going to highlight with this oval. In that small time frame, we don't trade that. You can see that Thinkorswim distinguishes between open market and the rest of the time by shading the time frames. So in this darker shaded area, that's when the market was closed, right? If we were looking at um, Facebook, Apple, Microsoft, something like that, we can go over and we can look at those. Here is SPY. The dark shaded area is the overnight hours. Go over and look at Apple. You could see again the dark shaded areas, or maybe we go to shop. You can see the dark shaded areas. That is the overnight hours. Now what we want to do is we want to talk about futures products. So here we are on the S&P. The dark shaded areas is the overnight hours. It's what is called Globex. Globex begins at 6 p.m. and it ends before the market open. Okay, so depending on what you trade, say corn or hog futures or precious metals, gold or silver, those hours could be completely different than these hours because we're talking about equity products. Now I am using East Coast time, the New York time frame, and it's the regular hours that we all try to stay on so that no matter where you live, we're always talking about a universal time frame. At the Bullish Bears, that universal time frame is consistently the East Coast time. So at 6 o'clock p.m., the East Coast time, the market opens, and that's 1800 hours. At 1800 hours, the market Globex begins, and you can hold that contract from then all the way through the overnight hours, all the way through the regular trading hours, and up to 1600 hours, which is 4 o'clock. Between 1600 hours and 1615, you really need to be getting out of your trade. That is a time that you really should just get out. That's your last opportunity. And then from 1615 all the way to 1800, it is time to sit out and do not participate in the market. One thing that you have to be aware of is margin requirement or buying power reduction. When you day trade futures and you only day trade, the margin requirement is 1/4 the size. So here we're on the ES. It's a $7,260 product per contract for initial margin or buying power reduction. Now, if you're only going to day trade it, then it's 1/4 of this size. So we get out the trusty calculator and we look at that number again, 7260. So we go here, divide that by 4. You need $1,815 per contract. But if you hold that contract into the close, the margin goes back to this value. And that's why we don't hold it into the close. So you need to get out of your trade before the market closes, and then you can get back in again when the market opens back up in Globex. Okay. So you now know the regular trading hours for equity futures such as the S&P and the NASDAQ and the Russell and the Dow. And if you want to visually see when the market opens, there is an indicator called daily open. For futures, it will activate at the beginning of Globex. To find that indicator, just type in daily. You can see here the daily open. Add that, and then go to your chart, and you can see that it will begin when the Globex begins at 1800. All right. Have a good one, everybody.